Good morning, everyone. It's been a positive start to the week and indeed the year, with US stock indices rallying and really continuing where they left off 2020. The combination of loose monetary policy, governments keeping these spending taps open, and the rollout of vaccinations means we are looking forward to an economic recovery, and stocks are rallying in anticipation of this. There have been some talk of a rotation into the so-called value stocks, and we've definitely seen some evidence of this early in the year, especially in the unloved energy sector, which you can see here is this orange line on the screen. It's rallied, don't pay too much attention to the percentages. This is more of a visual. Okay, so rallied since the start of the year, significantly more than any of the other sectors, as you can see. But then last week we saw a switch in that sentiment, with energy falling off and ending the week as the worst performing sector, with the sort of traditional leaders, tech and communication services, really leading the way last week. The question of whether or not, of course, this is going to be a trend that we see moving forward, or if it's just a sort of blip in the idea of this sort of reflation trade. It could be sort of influential that we have big tech in the spotlight again, with important earnings this week. We've got Facebook, Microsoft, Tesla, Apple, and Nvidia all reporting, among many others. I think there's 118 of the S&P 500 reporting this week, so definitely plenty there for the analysts to get their teeth into. Vaccination race. So I'm just going to close these tabs down here. Let's bring up the data here. So what we're looking at on the screen here, this is the Bloomberg vaccine tracker. And we're showing here the race to end the pandemic. Doses administered per 100 people. As you can see here, Israel sort of strongly out in front. United Arab Emirates as well. The Seychelles obviously benefits there from a smaller population. But then look at the where the UK sits just here. Over 10% now of the population vaccinated. Really pushing on and sort of leading the way. As we go down here as well, the US also coming out strongly behind as well, nearly up to 7% now. So what we can really take from this is the general idea that this sort of vaccination race will lead to an economic race as well. So the ones who are fastest to vaccinate their population will be able to return their economies to normal sooner, and obviously benefit from that as the economic figures and the growth rate of their economies comes through. Now, why should we care about this? Well, really what we want to see is the difference between the nations. So the UK and US clearly out in front. Europe and Canada here are lagging behind. Not even sure where Germany are. They're not even in the top countries here on the list. Spain, actually, one of the leaders, surprisingly, of all the European nations. And Japan haven't even started yet. So as we take this on board, what I want to bring onto the screen here is just this graphic here, which I'm hoping there it is, so it's going to show up. All right, so that'll take over there. It's the dollar smile. So we've seen that the dollar obviously has been in the doldrums for a while now, been in a steep downtrend, but it just seems to be struggling and stabilizing around the current levels. Obviously that downtrend has been driven by this part of the smile here, so the weak US and global outlook, as you can see, drives dollar appreciation due to safe haven demand. We saw that sort of early in the year, back in March last year. And since then, we've seen an improving global outlook, but no US outperformance, which has meant that the US dollar has been weak amid the hunt for yield. So riskier assets have been boosted by the weak dollar. And we've definitely seen that, and we're currently seeing it as well with the rallying commodities and global indices across the board, pretty much. So then, really, what's the next step? And this is kind of where I'm really focusing now. Is the US economy outperforms, and does the dollar appreciate in anticipation of Fed hikes? Now, because the Fed has taken on this new framework of average inflation targeting, what we're looking at is less potential here for US dollar strength. As we can see, it's turned from becoming a dollar smile to a dollar smirk. So even as the recovery is gaining momentum, the more dovish Federal Reserve reaction means that the drag from COVID may keep the dollar in the belly of this smile or smirk for longer. Well, this week we've got the Federal Reserve meeting. So there's no real need for them to change policy, and there's no expectations that they're going to change policy. But there has been a bit of speculation, a few comments from different Federal Reserve members about the potential for tightening in the future, and at some point the market's going to pay attention to this. Now, Powell will face the journalists in the press conference afterwards, and he's got to really balance this positivity about the future in the second half of the year with the need to keep policy and financial conditions loose for a significant time. And we've seen Vice Chair Clarida also making comments that there will be no change to interest rates until inflation has been at or above 2% for at least a year, although it is doubtful they'll commit to this formally at the meeting, but I expect Powell will be asked the question. So that's definitely something to monitor this week and see how they respond to this. Also, the idea that longer dated yields will be allowed to rise by the Federal Reserve as well without intervening. That could also lead to some dollar strength as foreign buyers come in to purchase the higher yielding bonds. If you take the German Bund, for example, yielding negative 0.5% most of the time, and you compare that to, say, a US Treasury bill, which might be yielding 1.1, 1.2, maybe even as much as 1.5% by the end of the year. It's quite an attractive yield, which might drive some dollar inflows. So that's certainly something to be watching for. Also, one currency pair that's really got my eye this week, perhaps more relevant actually, is the pound leg of this. What I'm really watching for here, as you can see here on the screen, the pound has been in a strong upward trend against the Japanese yen for quite some time now, 2 or 3 months. And I want to see this GBP performance really now on the back of this vaccination trade as well. Want to see if this has actually got any legs, and I really want to see it push out now. Okay, the very obvious resistance point here, which we're pushing up towards a greater speed, perhaps you might say, than we were previously. But the direction of the trend is definitively up, and I'm really looking for it to break out above this 142.716 area here, which will then open up these areas above, and it's a trade I really like for throughout the duration of the year, especially if the UK can continue outperforming with the vaccinations, and hopefully coming out of their restrictions sooner than other countries. One other sort of consideration here, I haven't marked this up, but you see the Euro GBP chart here, just hovering around this area, which I see as pivotal in this in this time really of pound strength. If we can break down below here, then I really think we can open things up and head lower, potentially even down to sort of 83, 82 area down here. Especially considering that the European economy is it's not in great shape in the best of times, and we're also seeing the usual array of political risk, and just generally being slow with everything. Unfortunately, the vaccine rollout hasn't gone to schedule at all. So yeah, really, it's the pound against the yen and against the euro that I've got my eye on, especially if risk sentiment remains relatively positive. Potentially as well, we could see if the yields, long dated yields, do rise, and we see flows into the dollar, but without any real change in risk sentiment, just really hunting for the treasury yields. That could also influence things as well, and we could see the euro lower on the back of that, purely from the basis that people were selling euros to buy dollars and grab some of that yield on the 10-year bonds. Thanks a lot, and I'll chat with you next week.